Hello and welcome to another update video about Solana. Yeah, Solana has reacted today to the micro support region. Price dipped back into the support region. This is really only a look at the micro patterns. If you're interested in looking at the bigger picture, feel free to check out the previous video. I covered the overall triangle pattern. I mean, the idea is we are in a triangle, we are in a fourth wave. I don't really want to cover the alternatives. They will only become relevant if the price breaks below the invalidation point at 119 USD, 119. That's the invalidation point. Until we break below that level, the development of an Elliott wave triangle in a fourth wave sideways correction has a chance. This correction likely started in March, and we have to expect a bit more sideways action. We seem to be trolling the lower half of that range. The range is defined still between 119 and 190 USD. And currently the idea is that we are moving up in wave D of the triangle. No? The D wave is not the last wave of the triangle, but we should still get an E wave afterwards. Basically, the D wave is a corrective rally normally that forms a lower high below the B wave top, which is the $190 level, which is why, as I said, these are the range boundaries. We shouldn't really get above that level in wave D. So, but we should go a little higher though. And there's sort of a rough target area here between $161 and $174. That's not super accurate, you know, let's say not super reliable in a triangle. We have to expect also some variations to this, but this seems like an ideal target based on standard Fibonacci extension targets within a triangle. And if we are following the idea of a D wave, there are a couple of ways how I could see this is playing out. Either as, I mean, there are a few wave counts, but well, whatever count it is, that's literally just noise. I'm watching for this D wave to unfold higher as long as we're holding the micro support region. The price now has reacted for a second time to that micro support area. It's defined between $125.81 and $135.04. And these are the fibs that were communicated once we put the top in place here in this A wave. Then we said, okay, maybe this was the B wave already, and we're moving up in a C wave, but the proportions don't fully align. So we then saw that the market kind of rallied correctively from the recent low, from the Monday low, and that therefore another test of the micro support region would be relevant, but still that we can watch for higher against 125.81. So that's the key level, because if this is a corrective rally, really at no point we should see a break below that level. Yeah, we could, you know, but this is really about the should, not the could. It's all about probabilities. So there's a good chance we're holding that, at least if the wave count is correct. And if we break it, we at least know something's breaking. But yeah, the idea is that, okay, you know, this might have been an A wave, and the B wave might have been a flat A, B, C. So that's possible. We might even get one more low, so we could get back into the support region and then move up from there. That's why I said, you know, the yellow count could be an ABC structure. There are a couple of variations of this. So the exact micro count is not so important. But what I can tell you is that as long as 125.81 is holding, we can watch for the C wave potentially. Important would be that we get a break above the last high at around about 146, 146.20. Here, the high from Thursday, to indicate that the wave C has started. Another wave count that I'm watching for here is a WXY structure. It's slightly different. This would imply an ABC in wave W, X wave pullback, and we could get a Y wave up, which is then an ABC in itself. I see them both as possible, both as reasonably likely, but because they are both corrective patterns, they could easily change a little bit. That's sort of how I see this now. I mean, could a local low be in already? Yes, here. There are a couple of ways how this could really be counted. We'll see if we can get a bit more clarity in the coming days, but we've just tested support again, and it's really, you know, the levels really matter. The levels matter, not so much the micro count, but at the same time, I show you my ideas of the micro count to help you understand the structure and how I get to these Fibonacci levels, because they are really what matters. I always say don't trade the don't trade the count, trade the levels. So again, trading the levels means, okay, adding a little bit here if you want to trade this. I mean, it's not even a great setup, right? But adding a little here, you know, and then profits are there now, right? You know, it's moved a couple of times away from support now. And yeah, but because crypto is often, they rally and then they have to go back to test support again, they rally again, regular profit taking is just important. But yeah, that's the idea about what Solana chart is doing at the moment. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.